Hello and welcome to RSM Employment Matters webinar. This is the latest in our regular People Advisory update. My name is Mark Holland and I'm your host for today. I can see many familiar names are attending today, so welcome back. But for those who are new to RSM webinar series, welcome. The information you will see and hear is correct as of 21 July, and we will do an updated event on this topic when further guidance is released. As with our other webinars, please do use the Q&A functionality to pose your questions, and we will try and ask the panelists as many questions as time will allow. Please do not use chat, as these may not go to the speaker. I'd now like to introduce our speakers, and I'm joined by Carolyn Brown. Carolyn is our Specialist Employer Relations and Disputes Solicitor, who heads up our employment legal team at RSM. Also, welcome return from Susan Ball, who is our Specialist in helping employers in managing people-related costs and mitigating risks from a taxes point of view. Steve Sweetlove joins us. Steve is a People Advisory Partner who will cover payroll aspects today. And last but not least, we're joined by Charlie Barnes. Charlie's an employment lawyer from our People Advisory Services team who helps finance and HR teams plan for and mitigate their people risks with a speciality in national minimum wage and holiday pay compliance. So what are we looking at today? Well, here's our agenda. We have 4 topics today: the CJRS recap and also update on CJRB, a particular focus on the CJRS scheme using claim corrections and problem areas, an employment update looking at changes from April 2020 and also changes planned from April 21, and finally reactivation and returning to work issues for folks coming off furlough. So now I'm handing over to Carolyn.
Thanks, Mark. I'm going to start with a recap on the coronavirus job retention scheme, particularly on the July changes, and give an introduction to the job retention bonus. So turning to the job retention scheme, this was designed to support employers who cannot maintain their current workforce because their operations have been affected by coronavirus. It's no longer required that they have been severely affected, and the impact was intended to help them retain their employees and protect the economy. It introduced the new concept of a furloughed employee, and it was announced on the 20th of March. It was operational for claims by the 20th of April, and it ends on the 31st of October. It allows employers to apply for grants from HMRC for their staff wages in respect of employees who were furloughed between the 1st of March and the end of October. So let's look now at the amounts that can be claimed. The position is from now and throughout the scheme until it ends at the end of October that the employee who is furloughed is to receive 80% of their salary before the furlough period, up to a maximum of £2,500 per month, and that is throughout the period as I've indicated, through July, August, September and October. But there is a change, and the change is to the amount of the grant which the employer can claim. The position remains in July that the employer is able to claim 80% of the employee's furloughed wage, up to the maximum of £2,500, and also is able to secure the employer national insurance and minimum auto-enrolment pension contribution. It changes from August, when the employer national insurance and minimum auto-enrolment pension contribution can no longer be claimed, but the 80% of wage up to the maximum of £2,500 can. And then we see that the position remains with the inability to claim national insurance and auto-enrolment during September and October, and a reduction in the amount of the wage that can be claimed down to 70% and respectively 60% in September and October, requiring the employer to top up the wages so that the employee still receives that 80% up to a maximum of £2,500 per month. So a quick recap now on the features of the Coronavirus Job Retention Scheme for the period up to the 30th of June. And over this period, the employee had to be instructed by the employer to cease all work in relation to their employment. And the period for which they had to cease work had to be a consecutive period of 21 calendar days or more. There were 1 or 2 exceptions as to when it actually could be used. There had to be an instruction given by reason of circumstances arising as a result of the coronavirus, and that is becoming a more relevant part of the concept of the scheme as we go forward. I'll mention that more in a moment when I talk about holiday. Just a reminder that the employer and the employee had to agree in writing that the employee would cease all work. There's been a lot of difficulty with that. I'm not going to go into the detail now, but we have had different positions with regard to the various pieces of legislation. And then in terms of exceptions from the prohibition on work, certain training and study were permitted. Work by a director, but only a director, to fulfill certain duties, provide information if the company were in administration, and also to make either the Coronavirus Job Retention Scheme claim or to pay wages. Those were not considered to be work. And the same position applied that elected or other workforce representatives were not considered working if they conducted those obligations, nor were pension and trustee duties considered to be work which would break the furlough period. So the scheme changed with effect from the 1st of July. The position is it's now much more flexible, but also more complex to operate. The position now is that all employers are able to claim for employees for whom that employer has successfully claimed a previous grant in the period up to the 30th of June. There's also some challenge in relation to the period moving from June into July, because furlough periods which started before the beginning of July have to still continue for at least 3 consecutive weeks, even if they're in the period of July when flexi furloughing would be permitted if a new furlough had been started. There is an exception to the requirement that you can only use the scheme from July if you had previously had people furloughed in the period up to the 30th of June, and those exceptions are for those who were on shared parental leave, reservists returning to work after the 10th of June, which would have been needed to be the beginning of a furlough period to make those 21 days up to the end of June, and some 2P transferred employees. So some sensible exceptions to that otherwise pretty rigid rule that people have to have been successfully furloughed previously to use the scheme from the 1st of July. Also from the 1st of July, claim periods which start on or after that date must start and end in the same calendar month. But the flexibility of the scheme is that employees can be brought back to work for any amount of time and on any work pattern, or they could still be fully furloughed. Of course, they mustn't work while they're furloughed, and that's probably a little bit more difficult to manage with the flexi furlough environment. And furlough claims have become much more specific, and they have to contain details first of the usual hours based on calendar days, then in relation to that claim period, the usual hours worked. And the hours furloughed will be the difference between these 2 hourly amounts. But there is a restriction on the numbers for which you can claim in the period after the 1st of July. And this is going to impact on people who may have been rotating furloughing on people on and off. It will not be a problem for those who've had their whole workforce fully furloughed up to the end of June. And the position is that employees claimed for in a single claim starting from the 1st of July cannot exceed the maximum number of employees that employer claimed for in any single claim ending by the 30th of June. And another requirement for claims from the 1st of July is that claim periods must last at least 7 days, unless the employer is claiming for the first or last few days in a month and the employer has already claimed for the period ending immediately before. I think you can see some of the complexity. So let's turn now to the job retention bonus. This was announced by the Chancellor as part of the plan for jobs on the 8th of July. And this is an introduction because it's what we know so far. So we currently know that in order to claim this bonus, the employer must have had their employee continuously employed up to the 31st of January 2021. That has to be somebody who earns above the lower earnings limit, which is £520 per month, on average from November 2020 to the 31st of January 2021. And the employee must be paid in each month of November, December and January 2021. So the bonus amount is £1,000 and it's the same irrespective of the actual salary of the furloughed employee. And you can claim it for employees who've been furloughed by the employer at any point under the job retention scheme. The employee has to have been legitimately claimed for, so we can expect some more detail around that, I think. And we know that the payments are going to be made from February, but we don't have specifics on the dates. So we've been told we'll get more information by the end of this month, in fact, the end of next week, 31st July, and we'll get full details in the autumn of 2020. But that's what we know so far in terms of being able to plan for using that bonus. We're now going to turn to focus on three aspects of the job retention scheme. I'm going to deal first with using the job retention scheme and, as best we know at the moment, the job retention bonus. Then Susan's going to pick up on claim corrections, and Steve will then look at some problem areas. So if we turn first to the use of the job retention scheme, many businesses are either planning or making workforce structure changes whilst receiving coronavirus job retention scheme grant support. And there's been much debate, particularly around terminating employees' employment whilst claiming the job retention under the job retention scheme for their wages. And we now have clarity on this area, so I'm now going to just look at some of these specific challenges. The first one was whether or not employers could claim for their employee wages where employees are furloughed during a redundancy consultation period, whether that was collective consultation or individual consultation. And clearly the concern here is that the consultation is with a view to a termination, and yet the intention of the scheme is to continue employment. And we do now know, as a result of confirmation from HMRC, that employers can claim wages for those fully furloughed days or flexi furloughed hours in the period up to the 31st of October, during which people are furloughed, but there is a redundancy consultation ongoing collectively or individually. And the second issue, and probably even more live issue, was with regards to notice periods. And these would be whether they might be a statutory notice period or, if it's longer, a contractual redundancy notice period, which is served either as fully furloughed or with some flexi furloughed hours. And we obtained confirmation from HMRC, who changed their guidance last Friday, that it is possible to claim under the job retention scheme for notice served on furlough, but of course not if it's paid in lieu because the employment has ended at that point. Another area, holidays have been an issue throughout this scheme, but holiday pay particularly has come into focus with some employers deciding to, especially under the flexi furlough scheme, to furlough people while they're on holiday. That is not allowed if it is simply a furlough during holiday. The position is that holiday that falls within a fully furloughed day is acceptable, but you cannot just put someone on furlough for their holiday. If you're looking at a longer period of furlough, taking holiday within it is still allowed. And the second point to make about holiday pay is that you can't claim for accrued but untaken holiday cost, which is paid on termination, again, because the employee is not employed at that point. And the final issue in relation to redundancy is whether any claim can be made either for statutory redundancy pay according to the statutory scheme or contractual redundancy pay. And the answer is that neither can be claimed because in fact the employment has ended at that point and the job retention scheme only pays grants for wages. So I'm just going to look now at several issues which arise in relation to managing employment costs, where employers are needing to be very flexible at present and actually asking their employees to do the same. And here are some of the areas to be aware of when considering the support available from both the job retention scheme and the job retention bonus when looking at these flexible options. And Charlie's going to cover some of the more flexible options in detail later. The first point I wanted to flag is that if an employee is not paid in each month and at least an average of £520 per month from November to January, then the job retention bonus won't be payable. So any option which considers unpaid leave or reductions in pay, which would be below this, will not succeed in achieving the payment of the bonus, but may retain employment costs. Also, just a reminder, of course, that the job retention bonus will not be payable for in respect of new recruits because they would never have been furloughed under the scheme. Therefore, if you're looking at unpaid layoff, you may, if you can afford it, want to consider doing that after February, on or after February. It's likely we're going to be in the position currently where needing to compare the costs and benefits between a coronavirus job retention scheme claim, workforce costs after it ends, and being able to claim the job retention bonus. Also just wanted to flag 4 other points to remember if you're looking at flexi furloughing or other pay changes. Obviously, reducing pay or hours is a contract change that needs the employee's written agreement, or there may be collective union agreement processes that are required. And if you're changing workforce terms, either an elected body, newly elected, or a standing body of workforce representatives should help those significantly because there may well be consultation obligations. And where changes can't be agreed, remember that if you have to move to a dismissal and re-engagement, were the employee not to accept the re-employment, that would be a redundancy situation and trigger termination payments. Also, just a reminder, if you're trying to keep your workforce aligned to the business but reduce the pay cost, that holiday at 100% of contractual pay continues to accrue while employment continues, even if the employment is unpaid, and untaken holiday also can't be paid for while the employment is continuing. So I'm now going to hand over to Susan, who's going to look at some of the points on correcting claims.
Thank you, Carolyn. So what happens if you make a mistake on a claim? Well, we now have the facility that if you've uploaded a claim, you can actually delete it within 72 hours so that you can start again. You also have the option that actually if you start a claim, you can now save it and go back to it later. From the 5th of June, we also have the functionality to correct overclaims by amending subsequent claims. So when you upload your claim, there is a particular box you can complete to amend the claim to reduce it if you've made an overclaim in a previous period. Obviously, you should remember that if you do that, you need to keep the records for 6 years to show how you calculated the claim. From the 26th of June, we also have a process now of correcting an error if you have no further claims that you're going to make. You will need to contact HMRC because you will need to obtain a payment reference number in order to pay back the money that's been overclaimed. Finally, if you're underclaimed in the period up to the 30th of June, it would be advisable to contact HMRC now to make sure that you can deal with that. Because the numbers that you've claimed for in the period up to the 30th of June obviously impacts the amount of people you can claim for from July onwards. HMRC, if you have an underclaim, will conduct some extra checks. So again, you'll need good record keeping to enable this to happen. It's also worth bearing in mind that in the Finance Bill, we have now legislation passing through Parliament, which requires employers to correct and notify HMRC within 90 days of errors in previous claims. Once the legislation receives royal assent, any previous claims will be subject to the 90-day rule. Going forward, after the legislation is finally passed, then you'll have 90 days to correct a claim without a penalty. the legislation also applies a tax charge to any amounts that have been claimed incorrectly. 100% tax charge rate is applied. In addition, penalties may also apply. So it's advisable to make sure now that you deal with and review any previous claims. So who might look at your claims? Well, obviously HMRC might look at claims, and we have had a situation so far where we've already seen one arrest for fraud in relation to a claim. We are also aware that HMRC have over 3,000 reports to their hotline by individuals in relation to potential fraud on furlough claims. In addition, however, internally you might have a self-review because you have some senior officer accounting responsibilities, or an internal audit function who might want to review. It might also be that your auditors would like to look at whether the claims are correct or not, in order to look at the amounts of money you've received and whether this impacts your finances. If your intention is to sell sometime in the future, then there may also be due diligence inquiries. As we said previously, you do need to keep the records for at least 6 years to demonstrate how you came to the amount you've claimed in relation to furlough from HMRC. This is obviously more complicated as we go forward in relation to flexi furloughing and how you calculate, as Caroline explained, usual hours. Now I'm going to pass on to Steve to talk about some of the problem areas.
Thank you, Susan. So the first problem area that has been in place since version 1 and will be moving into version 2 is the national insurance and pension elements of the claim. So for version 1, just in case any of you, as Susan had suggested, if anyone's going back and looking at their claims whilst we've got the opportunity to make any adjustments and amendments just to make sure that everything has been claimed properly, one of the common mistakes, or one of the most common mistakes that we've seen for version 1 is employers who haven't been recognising any top-ups or additional payments which have an effect on the national insurance element. So good news going through to version 2 is those top-up requirements go away, so that's just one complexity less. But it's well worth looking at the claims from March through to June to make sure that they all have been captured correctly. So instead of the complexity moving into V2 of the top-ups, what we do have is a two-step prorating of the NIC secondary threshold. So effectively, first we are prorating for the number of days furlough in the period, then for the number of hours divided by the usual hours. So it brings the NIC calcs very much in line with the pension, which has always been a prorating of the lower qualifying limit, as opposed to the more complex NIC rules. The second area which relates to V2, so the version of the scheme that's in play from 1st of July, is effectively how frequently the claim should be made. This has already been covered, but just to bring it to life a little bit, is the point around that the claims cannot cross the calendar months. So the bit that should have already happened, particularly for those of you that are running payrolls that are not monthly, so any variation of weekly, 2 weekly, 4 weekly, it's unavoidable that there will be part periods in July. So the most common one for weekly payrolls would be that you would have already had to have claimed or calculated ready for claim in the next few days the last part of June, which the Monday and Tuesday of the 29th and the 30th of June happen to be, as I said, Monday and Tuesday that were June dates. So a very common frequency of pay periods for a weekly payroll will be a Monday through Sunday, in which case there'll be 2/7 of that period fall in June and 5/7 fall in July. So be very clear of where your dates fall. And the same will happen at the end of the month, where it's likely Monday to Friday for that type of payroll, which is set Monday to Sunday. 5 days will be in July, the 27th to the 31st, and then the 1st and 2nd will fall into August. So it's just been very clear how many periods that will fall into the calendar month, so that you make the claim and you capture everything you need to. Employment allowance is just on here in that it has been an area, if an employer is claiming the employment allowance and CJRS, it's just to be careful that you're not overclaiming, that the amount of the NI proportion of the CJRS claim has been reduced by any employment allowance that's been claimed. And there's some specific rules around that as well, worth checking, just to make sure that you're not overclaiming, but similarly that you're not underclaiming. So moving on, the point around the calculation of the usual hours. So this comes around the V2 and the flexi furlough. This is effectively the underpinning calculation that will lead to the amount that can be claimed. And the new term that's introduced here is the repeating working pattern. And to bring that one to life, that's effectively saying that normally someone's employment contract might say something like you are due to work 35 hours per week, Monday to Friday. So that might be quite a common one, 7 hours a day, Monday to Friday. So the temptation would be that to say, well, the usual working hours in July then would be however many Mondays to Fridays there are multiplied by 7 hours a day, and there are 23. And if you multiply 23 by 7, you'll come up with 161. But the actual guidance has got a very specific calculation where you have to look at the repeating working pattern. So because it's a weekly work plan, then there are 7 days in that repeating working pattern. You might have 2-week rotating patterns, whatever, in which case there'll be more than 7, but in the case I've explained, it's 7 days. So 35 hours a week divided by 7, the number of days in the repeating working pattern, comes to 5 hours per day. There are 31 calendar days in July, and that comes to 155. So you see the difference, albeit slight, but there's the difference, and it's important to understand how those calcs work for a fixed working pattern. Then there becomes another piece of complexity for the variable working patterns, as if we haven't had enough to deal with calculating variable pay and looking at the average for the 1920 tax year and the higher of the average or the actual pay earned in the corresponding payroll period in the 1920 tax year. For working out usual hours, attention should be drawn to the wording that we're looking at the same usual hours for the same calendar period, not the tax period. So in this case, if you have a weekly pay period that's 20th of July, for example, to the 26th of July, it's Monday to Sunday this year, but last year it was Saturday to Friday. So again, in terms of when you're looking at, well, what hours were worked in the same calendar period last year, you'll be having to look at 2 different pay periods. There are some quite useful worked examples on the gov.uk website if this does apply to you, or of course contact details up at the end to get in contact. Salary sacrifice, whilst it might not be the most common issue that we're seeing, it can be one of the ones that will have quite a significant impact in terms of monetary terms. So it might not be as common as the NI one that I've spoken about before, but in terms of the effect on the numbers, it's a very important one. And this one is based around the rules of that you cannot pay an employee any less than what you're claiming under the CJRS scheme. What you can't do is claim an amount, £1,000 for example, and then attempt to pay the employee that £1,000 and then take 5% salary sacrifice off of them, because effectively then they haven't received the full claim in cash as per the wording of the scheme. So where this might be the case, where an employee has either a cash or a percentage-based salary sacrifice contribution, then a gross up might be required. So effectively dividing the amount that you're going to claim up by the percentage salary sacrifice to give a gross amount that when the salary sacrifice comes off, you're not paying under the claim. But again, just drawing attention there, that's making the assumption that your furlough agreements allow you to pay at the claim level. There is a big distinction between what you're claiming and what you're paying. They might not always be the same thing. And then the last problem area or area of challenge will be around the reference salary. So this is a bit of a reminder here. just to confirm that the fixed rate for the fixed rate employees are based on the pay period prior to the 19th of March. And I've had some debate with clients over the last sort of few months. There are going to be winners and losers based on that rule. So anybody who, for example, were 10 hours a week in February, but then they went to full time from March, if they didn't have an RTI before the 19th of March, then their furlough claim, CJRS claim, will be based on the 10 hours, not on the full time, and vice versa. Anybody who's maybe stopped childcare vouchers, you're going to be in a position where, as an employer, it may well be that you're having to pay that extra pay now because the employment contract requires you to do so. However, your claim would have been based on the post-sacrifice amounts back in February pay date. And we've touched upon the hours, but just a reminder that the variable pay, that the claim component is based on the pay of the average of 1920 tax year or the corresponding payroll period in that tax year. So effectively for April, May, June, July, and going forward, whether it's flexi or non, you are having to look at the average pay will remain consistent because there is only one average for 1920. But the amount that you're comparing that to find the higher is likely to be different every month for a variable paid employee. So it's not a case of doing one calculation back in April and then bringing that forward month on month. Each month there needs to be a new comparison. That's the problem areas and the challenges. Now moving on to a section to bring to life some of the changes. All of these will be new. Some of these will be a reminder, but we thought it important to remind because April, where many changes come in, was for obvious reasons a very chaotic time. Lots going on. So some of the things that we'd have spoken about in the February edition of this update will be repeated here, just as a kind of a reminder of what we should be doing, but then also looking ahead of some of the planned changes for 2021. So firstly was the employment allowance. I touched upon it as being one of the key challenges around the CJRS scheme, and in where this has become quite relevant has been clients who have been asking us to help with claims looking around the CJRS. When we've been looking into employment allowance, it actually draws into, well, were you entitled to claim employment allowance in the first place, because the rules did change. So it's just a reminder, as we've been looking more closely at these things, it does remind us that often new things might be overlooked or maybe caught up in the confusion or the chaos of the moment. So again, CJRS claim or otherwise, just do take a point of checking that whether you are actually entitled to claim the employment allowance, and if so, making sure you've got the relevant RTI flags checked within your payroll software. Moving on to another one that's that we spoke about last year, and again, just because it's one that can often be overseen, which is around the basic earnings assessment for those employees who joined an employer-provided childcare voucher scheme, effectively between April 11 and 2018, where new entrants haven't been able to join since. And effectively, this is around just making sure that the employee isn't receiving too much tax relief. So if they are receiving the childcare vouchers maximum based on what they would have been entitled to if they were a 20% taxpayer, if subsequently between 2011 and 2020, and if they joined in 2011, they've moved from a 20% taxpayer to a 40% or higher. But the amounts haven't been adjusted, then they may well be in a situation where their relief is too high. So it's just worth making sure that that's an annual job that happens. And as we're moving into the new tax year, there's no better time to do it than now if you haven't already done it. Re-enrolment for pensions auto-enrolment. Well, the last blanket staging date for the smaller employers was April 2017. And any new employers at or around that time needed to enrol early in 2018. So now is a time, again, and we have been seeing this, we have been seeing some employers who have missed or overlooked the fact that they are 3 years on from their staging date, and therefore they need to re-enroll. And that's a job that has to happen every 3 years from the staging date. There is a little bit of clarity that we've received recently around the 3-month window that you get. So effectively, you could re-enroll 3 years and 3 months on each time. It's just a window to give some flex. But in theory, every 3 years, even people who have opted out of the scheme during the previous 3 years get re-enrolled, and that cycle repeats. So it's just a case of reminding yourself of when your re-enrollment date is, and if it has happened in the last few months or the last 3 months, still an opportunity to get in without an issue. Obviously, even if it has been more than 3 months, you still need to do it and just get in contact with the pensions regulator to let them know. But it's just one to draw attention to. And then in terms of April updates, where we sat here in February was we drew attention to budget for the 11th of March, when we said keep an eye on if there were any further changes to what we presented on the February update. Good news is in this respect that there weren't anything. Obviously, we've had plenty of other stuff come out since that budget, but really this slide is just again as a reminder, if you haven't already, especially for people who might have gone on to CJRS scheme, gone on to furlough during March and April. It would be easy to overlook when they do return, that they may well have needed a national minimum wage uplift at some point or from April. So just be checking for that. Again, I mean, we've touched on before. I know Carolyn spoke quite a bit about holidays, but during April to date, there's been a number of bank holidays. So making sure that they've all been paid at the same rates is probably prudent as well. Auto enrolment, I touched upon that. No changes to the rates. We're still at 5 and 3. Income tax rates and bands, no change. You do have Scottish-based employees. The bands were updated in April, and the rates not, but the bands were. The NI thresholds have been updated, and just check that student loans and statutory payments were all uplifted in your software so that you're paying those at the right rate. So that's me. I'll hand you over to Susan to take us through the rest of the updates.
Thanks, Steve. So first of all, we had a change to termination payments in April. Several years ago, if you remember, we had a change to how we had to calculate notice pay. But from April this year, we had a change in the national insurance. So where you have a payment which is subject to tax over 30,000, you would also have now employer national insurance. In relation to company cars, we had some changes. It's probably worth having a look at these if you haven't already, but the major one really is in relation to electric cars, where we have a 0 banding now for 2021. We then had some changes in relation to expenses for voluntary office holders. Historically, we've had a concession where if somebody holds an office as a volunteer, they can claim expenses which wouldn't be taxed. This has now been brought into the legislation, and so for people this applies to, it's worth having a look at the revenue guidance and making sure that actually the expenses they are paying are still able to be paid tax-free. In relation to those people who have to complete short-term visitor reporting, due to COVID-related matters, we've got an extension. We should have had that completed by the 31st of May, but actually we have now up to the 31st of July, so we've got a further week. If you haven't done that already, you should get that in. In relation to disguised remuneration and loans, for those of you who know that this is what you have in relation to current or former employees, and they still have an outstanding loan, then a report must be sent to HMRC by the 30th of September. So that's quite important not to miss. Finally, in relation to some matters for April 21 as a sort of update, but things people should be thinking about right now, is the move we had in relation to the IR35 rules, off payroll worker rules, which initially were supposed to come in April this year, but were put off for a year, again in relation to the COVID situation. Those rules are coming in from April 21, and anyone who knows about how difficult they are to apply will know that they need as much time as possible to get their processes and procedures up to date in order to deal with them. So the rules will apply to the private sector, medium and large organisations from April 21, and also the changes apply to the public sector. We also have an announcement from HMRC in relation to employer-provided living accommodation under the representative occupier rules, and they are withdrawing what effectively is a concession from April 21. So again, any employers who have people in accommodation, it would be advisable to review the accommodation, and if they haven't historically been reporting them to HMRC, then to look at whether the other exemptions would apply to these individuals who previously qualified under representative occupier. The main two exemptions cover people who are in accommodation for proper performance or accommodation where it is customary and for better performance. And obviously you have to bear in mind that that's two criteria, customary and better performance. And certainly in some sectors, HMRC have given additional guidance in recent years over what they consider to be customary. So if this applies to you, it's worth having a look and making sure that you are dealing with those correctly from April 21.
Hi, so I'm just going to have a quick look at some of the employment law changes that took place from April onwards. So whilst the CJRS has taken centre stage for the past couple of months, there's been a number of changes that you may have missed, but here's just a quick summary of them. First of all, the method of calculating holiday pay for workers who work shifts or have no fixed hours, or who earn different rates of pay depending upon the times of day that they work has changed. So prior to 6th of April, their holiday pay should have been calculated by taking an average rate of weekly pay over a 12-week period. Prior to the date the holiday is taken, that reference period is now increased to 52 weeks. So payroll and HR systems should now be up to date to account for this change. It's worth pointing out that holiday pay is being targeted as an area of worker exploitation by the government, so it's expected that state enforcement of holiday pay will be introduced in the very near future. All workers and employees must now be provided with a statement of particulars, so effectively a contract of employment no later than the first day of their employment, and that has to set out a list of basic terms on which they're employed. This used to only apply to employees, now it applies to workers as well, and it used to only have to be provided within the first 2 months of employment, so important to get your onboarding processes up to date, and also to update your contracts because that list of basic terms has changed. Failure to do so can lead to claims for compensation of up to 4 weeks' pay per affected employee. Employees with at least 26 weeks continuous service now have a right to 2 weeks paid time off if a child dies under the age of 18 or stillborn or after 24 weeks of pregnancy. And employees who don't have that length of continuous service still have a right to 2 weeks unpaid leave, but you can agree to provide an enhanced contractual entitlement if you wish to in those circumstances. As a result of coronavirus, from 14th of March, employers with fewer than 250 employees could claim for up to 14 days statutory sick pay, where a worker has been off sick for a coronavirus-related reason, and that includes self-isolating or those who are shielding. Agency workers must now be provided with a key facts statement by the recruitment agency that is finding them work. This should be provided before the engagement commences and sets out key details such as the amount they'll be paid and what deductions will be taken by the agency from their pay. Effectively, it's to give the worker an understanding of what happens to their pay before it gets to them. And if you use an umbrella company, you will need to gather information from the umbrella company to complete that key facts statement. Those of you with 250 or more employees will probably be aware that enforcement of gender pay gap reporting for the financial year 19-20 was suspended in light of the coronavirus pandemic. Despite this, 50% of employers still publish their reports this year, but enforcement of the 2020-2021 reports will resume, and there is a concern that the effects of the pandemic may unwind some of the progress made on narrowing the gender pay gap. So there might be a more concerted effort to explain some of this in the narratives that support your gender pay gap reports. If employees are prevented from taking their holiday due to coronavirus, then they are entitled to carry over up to 20 days of that holiday for up to 2 years. However, this doesn't mean a furloughed employee is prevented from taking their holiday. really what this is meant for those employees who have not been able to take the annual leave because of their work commitments during the pandemic. But again, it's a discussion that should be had with those who've been impacted. And since the 6th of April this year, the threshold for employees to form a body which the employer must consult with over certain matters has lowered. This change only affects employers with at least 50 employees. What it does do, it makes it easier for employees to come together and form a consultative forum. And historically, this right's not been commonly enforced, but I think as we find ourselves in a deep recession with weaker job security, as well as the challenges of a different way of working, we might see more employees coming together to enforce this right. So that's just a summary of those changes. Now I just want to move on to have a look at reactivation and returning to work issues that you may now be faced with. So as the furlough scheme winds down from the 1st of August, many employers will be sadly considering redundancies, but to achieve the necessary cost savings or to adapt their workforce to meet the needs of the business as it comes out the other side of the crisis. We don't have time to go through all of these alternatives to redundancy, but it's worth sparing some time to have a look at those, because these are all options that should be considered during the consultation process with employees if you are considering redundancies. If we get the V-shaped economic recovery we're hoping for and avoid a second wave, then there is a belief that employers will need to retain their talented and experienced employees to meet the necessary demand. It's also worth noting that many of these alternatives will result in changes to the contract of employment. So, as I said, it is important to discuss these during consultation, and it may require agreement with those who have been impacted. So now that if we have a look at returning to work as we progress out of lockdown, coronavirus has been devastating for businesses and organisations, and since the 23rd of March, the government's advice to employers has been fairly straightforward. Employees should work from home if possible to help curb coronavirus. Now, that instruction from the government changed last week when the Prime Minister announced that from the 1st of August, employees should go back to work if they can. But then confusion reigned when in the same week, the UK's chief scientific advisor publicly stated that working from home is still a perfectly good option. So we're still waiting for this updated guidance to be published, but the likelihood is that employers will be given more discretion about whether their employees should return to work or not. Now, that discretion can be unhelpful because it creates uncertainty over what is the right thing to do. It can also lead to an unfair playing field because unscrupulous employers may use that discretion to achieve a competitive advantage over those who perhaps hold a higher duty of care towards their employers. So this is likely to present even more challenges for employers. What's the right thing to do? How can they ensure it is safe for employees to return to the workplace? How do they deal with the workforce that is anxious about returning? And what about those that have experienced the benefits of remote working? Well, if your employees are able to continue working from home, there's no reason why this has to change, but you may want to exercise caution because of concerns about whether it is safe to return to the workplace, for example. And you may find that productivity hasn't perhaps been as impacted by home working as first feared. Some well-known businesses have now stated that their employees can work from home forever if they wish. However, there are still concerns about full-time remote working. Does it stifle innovation and idea creation because there's less discussion between colleagues who are not in the same physical location? Are junior members of the team missing out on learning and development through lack of one-to-one supervision? Surveys have indicated that the majority of employees will actually prefer seeking a balance between working from the office and working remotely. So it's sensible to consult with your employees about what they would like to do and get their views on what a safe return to the working environment might look like. How would they like to work in the future? Do they want to return to the office? How often would they like to work in the office? And what are their concerns about taking public transport to get to the office, for example? The responses to these questions will also help shape your COVID risk assessment, which must be undertaken before allowing employees back into the workplace. And if you've got 50 employees or more, you must publish your risk assessment on the website. Although, if you don't meet that threshold, it might still be a good idea to do so anyway. Sensibly, that risk assessment should be shared with all employees, and the measures you are taking to mitigate the risks should be explained to them. As you said, many employees will be anxious about returning to the workplace, and some of the clients that we've spoken to have introduced initiatives such as virtual tours of the office and provided training on the processes in place when workers do return, just to give them a bit more comfort about the safe environment that they will be returning to. Some employers have also introduced regular COVID-19 tests as part of their risk strategy. Now, this is perfectly lawful if it's gone about in the right way, but the important thing is to remember that that test result will amount to personal data belonging to those employees. So thought does have to be given to ensuring the privacy of that data. One of the questions that we get asked a lot is, what will this change of approach from the government mean for shielding employees? Currently, they shouldn't be at work and working remotely if they can, but that will change from the 1st of August when the guidance on shielding changes. Many have been furloughed because they can't return to work. And if there is work for them to return to, what should the employer do? There's currently no right for the employee to demand to work from home. It was discussed by the government, but I think in light of the recent statement by the Prime Minister, it's unlikely to happen. So discussions should be had with those employees about what measures could be put in place to mitigate those risks. And if they're still concerned about returning and they cannot work remotely, there's still the option of the furlough scheme until the end of October, although there are the cost implications of that. If that is something that's not doable, then other options might include placing the employee on sick leave or asking the employee to take unpaid leave or annual leave. Whilst some employers have or will be reopening their workplaces, the likelihood is that more employees will continue to work from home for a proportion of their time. So it's important to ensure that you revisit some of the risks of home working and mitigate those so that you're not exposing yourself to a future liability. So the first port of call is revisiting your contracts of employment and policies. Does the place of work and hours of work need updating to reflect the agreed position? What expenses will you reimburse for the employee for when they are working remotely? For example, will you reimburse the cost of travel if they have to go to the office? Will you cover any costs of IT or home office equipment, or contribute to some of their utility bills whilst they're working from home? Now, there will be tax consequences which you should consider before making your decision, which Susan will be discussing very shortly. But it's important, though, that the decisions that are made are reflected in the contractual documents. You also have to think about carrying out the necessary health and safety risk assessments when people are working from home, because you still have a duty to ensure they have a safe working environment. So if they set up their desk, chair and IT equipment correctly, and has all the electrical equipment they're using from home satisfied the necessary safety tests. How are you ensuring and monitoring whether employees are taking the necessary rest breaks from work whilst they're at home? So recent case law has confirmed that employers must be able to provide or must be able to prove that their employees are not working in excess of the legal limits and are taking the legally required rest breaks from work. So monitoring that when employees are working remotely will be more challenging. And is your information security still fit for purpose? If those working from home regularly handle employee or customer personal data, then data privacy impact assessments need to be undertaken to ensure that steps are taken to protect the privacy of that data. The more people you have working from home, the more susceptible you are to cybersecurity threats via home networks. One of the challenges that will be facing many employers at the moment will be returning furloughed employees, and also how you reintegrate those furloughed employees with the non-furloughed. The perceptions of both groups may be different from the reality. The non-furloughed believing that the furloughed have been enjoying a break when in fact they've been itching to get back to work and are probably in fear of their jobs being at risk. So reintegrating and reuniting those two groups will be crucial as you work your way through this crisis. There'll also have to be decisions about who should return from furlough leave and who shouldn't. And care needs to be taken to ensure that decision isn't tainted by discrimination, for example, only bringing those back who don't have caring responsibilities, which statistically is more likely to be women than men. And as we move through this crisis, there should be some thought to what the future reward and incentive strategy of the organisation should be. What employees value from a job is likely to change. This pandemic will change what's important to people in the future. The ability to work from home means there's likely to be a greater demand for shorter working weeks or non-traditional working hours. So, for example, this may also have an impact on how you might go about rewarding them. And there's talk about the weighting that might apply where jobs are undertaken in London, but if they can be done from a remote location with a lower cost of living, should that mean that that weighting won't apply? Mental health and wellbeing will almost certainly be top of the agenda. So unless already in place, employers could introduce non-financial benefits such as mental health support or employee assistance programs. And with morale probably at an all-time low, is now the time to introduce a share incentive plan, giving employees a stake in the business and its future success. There's also the additional government support schemes to consider. So with the new Kickstart scheme, which will fund the creation of 6-month work placements for 300,000 16 to 24-year-olds. And that scheme is due to launch in August, and the government has said it will fund up to 25 hours pay at the relevant national minimum wage rate, together with the covering the employer NIC and minimum pension auto-enrolment contributions. In addition to that, employers will receive a payment of £2,000 for every apprentice they hire under the age of 25, and £1,500 for those apprentices they hire aged 25 and over from the 1st of August to the 31st of January 2021. Now we're still waiting for the finer details of those schemes to be published, but certainly anyone who wishes to take advantage of that does need to consider the contractual relationship with those they employ and that the necessary legal framework is in place. And as I said, shaping some of the decisions that we've just discussed should also be the tax implications for the business. I'm just going to pass over to Susan, who's just going to run through some of those for us.
Thank you, Charlie. So very quickly, home working expenses, as Charlie mentioned. Historically, employees had to be designated home workers in order for them to claim or be paid expenses which would be tax-free. Due to the COVID situation, the government relaxed the rules and basically said if your workplace was closed or you were self-isolating, then you could claim these expenses and they would be tax-free, providing you meet the criteria. Particularly the noticeable changes in relation to reimbursement of costs. Normally, if an employee had purchased equipment themselves and they were reimbursed, then the tax relief wouldn't have been available. That is now available, but it does impact when you have the equipment, who owns the equipment and how you deal with it if it's returned or not, depending on whether the employee remains with you or not. So it's worth bearing that in mind. Many employers are also looking at whether they can make a contribution towards electricity and heating, and the easiest way perhaps to do that is to look at the £6 per week allowance that's available, although you can actually make a contribution to actual costs incurred if you have receipted expenditure. A couple of other areas worth mentioning, and probably the most significant one was in relation to COVID testing. The other week we were told by HMRC that COVID testing would be actually taxable. Following a couple of days of hiatus, it was reversed, and the Chancellor announced that actually he would bring in legislation so that COVID testing of employees was not taxable. There's a few other areas on there that are worth bearing in mind, depending on whether they apply to you. If you've had to provide people with accommodation, for example, so they could stay near their work, unfortunately that would be taxable if that's their permanent workplace. So you do need to bear all of these things in mind. The government do have on HMRC's website a specific area where they are looking at expenses related to COVID and giving people advice on whether they're taxable or not, and it's worth taking a look at that on a regular basis. So I think now the idea is that we answer some of the questions. So I'll pass over to Mark.
Yes, thank you very much indeed, all of our speakers. I'm very conscious that we are very, very tight on time now. I'm just picking up one opening statement. Furlough is now more flexible but more complex, and that's borne out by the volume of questions we've had, which has been more than I've ever seen for all of these events. We will endeavour to answer all of those questions directly. If I can crave everyone's indulgence just for a couple of minutes, there were sort of three themes that crossed my mind or came to me from the various questions. The first one was really, how does one deal with furlough payments during redundancy processes? And I don't know, Caroline, is that one of your area that you might be able to just just a very quick response on us.
Yes.
Any thoughts?
Thank you, Mark. So the position is that you can claim while you're consulting with someone about redundancy. You can claim while someone is serving notice redundancy while they're furloughed. You cannot claim pay in lieu of notice. And you cannot claim in relation to statutory or contractual redundancy payments.
Great stuff. Thank you very much. And then another recurring theme was really around how one deals with weekly paid workers, that they're frequently paid hourly. Steve, would this be one perhaps in your direction?
Absolutely, yeah, I can pick that one up. So I think there's 2 points there, and I've seen some of the related questions. Yes, so one of them is splitting the periods across the months. You're going to have to do that. So the example I used was a Monday to Sunday. If that's your week's periods, then the 29th and 30th of June are going to be June. That's a Monday and a Tuesday. The last 5 days are going to be July. So you do need to split out the hours. What I would do is the examples that are on the gov.uk website, look for 2.1 specifically. 2.1 gives a good example around the usual hours and specifically looks at weekly. Whether that's part of a month or separate weeks, they're quite good examples. Or by all means, when you see my photo with an email address on the next slide, I'm happy to take a direct message.
Okay, thank you very much. We've also had questions around holiday pay. I'm not sure if that's Susan or if that's more Carolyn again. This is a very complex area, having said which, so it may be we do need to do with those specifics.
Yeah, hi, it's Carolyn, I think. So one of the questions we've had is, can we just clarify where this sits in the guidance at the moment? It's in the guidance dated the 10th of July, headed check if you can claim for your employee's wages through the coronavirus job retention scheme. And within that, there is a section which says that in relation to holiday, you cannot claim. It says employees should not be placed on furlough for a period simply because they are on holiday for that period. So that's the point we were making.
Thank you very much, Karen. I think probably in that we're now about to turn pumpkins, we probably do need to draw this to a close. But I would thank the speakers. I'd also thank everyone who's taken the time and trouble now to dive into this session, and especially for those who've raised questions. As I said, there are so many questions as well as a few that have come directly to me, and the speakers will be responding to those and also picking up on these points for the update of this webinar. The slide showing now just gives an idea of the sort of areas that we at RSM can help in, and I won't read them all round. You will be getting all of these slides anyway, so please do have a look at this. If we could quickly move on to the next slide, if we may. Here's, again, these slides will be coming out to you with links through to other webinars that we have done, and you're very welcome, please, to access those, and please do. Finally, here are our speakers in all their glory. You'll see there are email addresses there. Please do contact them. They want to hear from you, and that will be great. And I think the very last thing from me is to say, yes, if you could please keep us up to date with your preferences. We're clearly required to ensure that we do not send you material you don't want and whatever else under GDPRS, etc., etc. So please do visit rsmuk.com preferences and tell us what you'd like to hear from us, and tell us what areas you're interested in, so that we can ensure we keep you updated. And so that leads me finally just to say thank you so much, everyone. So thank you again to the speakers, but thank you everyone who's taken the time and trouble to join us today. We live in exceptional times. None of us in January, I would guess where we would be now 6 months later. Sitting here, listening to the speakers, what I'm learning is, if I didn't know it already, I'm learning even more just how complex the questions are. And not only is it around the furlough and the job retention scheme, now the job bonus scheme, but also, as Charlie's been saying, the questions that we as employers need to address going forwards. So clearly a lot of interesting topics covered, a lot of material covered, a great many questions that we'll be getting back to. And as you so often said now, please keep well, and I look forward to speaking to folks in due course. Thank you so much.